The summer of 2024 has been a wild ride, with such unexpected events as Grandpa Joe Biden bailing on the presidential race and Cheeto Bandito narrowly dodging a no-scope, to Boeing whistleblowers dropping faster than their airplanes, and the high-flying Nvidia taking the crown as the world's most valuable company, only for the entire global market to get pimp-slapped by the Japanese central bank shortly thereafter. But no matter what is going on in the world, humanity's most reckless traders at WallStreetBets never falter in their pursuit of sick gains. For as chartered financial advisor Thomas Jefferson famously said, all men deserve life, liberty, and Lambos. My friends, let's waste no time in diving into WallStreetBets' dankest trades of Hot Boy Summer. Kicking off with number 5, we meet a boy named Even Attitude 7765, whose contrarian trading habits should not be underestimated. A dedicated lurker, Even Attitude joined WallStreetBets in May 2022 during the depths of the bear market, but his post history indicates that he remained silent and deadly. Instead of commenting, he spent his time reading and calculating, observing how the ChatGPT release that November awakened something in the tech speculators and sent markets on a new AI-driven hype train. Having started his WallStreetBets career during the bear market, the young man was not impressed by the ridiculous direction the market was going all through 2023. He recognized how all a CEO had to do during an earnings call was say, "We like AI," and the stock would immediately jump higher. The trend got so ugly that companies started creating AI dog bowls and toothbrushes. AI was becoming the new blockchain, and Even Attitude believed people would soon see past the smoke and mirrors. He was confident that in short order, people would see that there was no actual artificial intelligence in an AI-powered dishwasher, and investors would dump their overpumped shares. But throughout 2023, it was not so. His $13,000 portfolio suffered a probably AI-powered shaft as the hype around generative AI everything grew. Our man began 2024 down over 75% to $3,000. The struggling skeptic bailed out and held cash, waiting for some hint that the market would turn its back on these needless AI products. At some point, investors would have to realize that a CEO saying AI 26 times during an earnings call didn't actually mean the company would produce any useful products. Eventually, the emperor would be left naked. That time came 6 months later, when our man determined that the year-to-date gain of 14.5% was too hot, and the market would soon decline. On July 11th, the bear came out of hibernation to buy puts on CrowdStrike and Tesla. Crowd was up first with $2,600 worth of puts. On no particular news, the stock lost a few points, leading to a quick gain of $6K. Attitude then moved all his chips over to Tesla with his buffed up $8,000 portfolio. With Bloomberg announcing that Elon's robo-taxi was delayed by at least 2 months, probably a lot more, the stock tanked about 8%. That $8,000 turned into $18K within an hour. The big man cashed out with already a remarkable win. But he was nowhere near done. The true contrarian swapped most of his ammo back into cash, looking for a tipping point to really go balls deep. And finally, that point came on July 31st, when the Bank of Japan raised rates by a teensy bit, and US jobs data came in weaker than anybody had anticipated. The market went into a rapid tailspin, with the tech-heavy Nasdaq having its worst single day since the COVID crash. As the AI bubble flyers like Nvidia and SMCI got shanked, Even Attitude did an assessment to see which company would get its fudge packed next. On Friday, August 2nd, the tech darlings were getting spanked, but Apple held up surprisingly well, staying green until about 15 minutes before market close. Between 3 and 4 p.m., the stock lost 1.5% from about 222.70 to 220. This initial undeserved strength, coupled with the late-day meltdown, showed Even Attitude exactly what he was waiting to see. On Friday afternoon, during that pitiful power hour, the big bear took his entire balance of $19,000 and threw it down on puts expiring the following Friday, August 9th. Over the weekend, he raised a glass and toasted to the AI bubble's pop, and that Apple would soon follow the tech stocks into the shitter. Monday morning, August 5th, Apple opened at $213.50, and by 10:30 was down below $208. Broader market weakness and a new report that the big man Warren Buffett had dumped shares caused a big $12 drop right off the bat. Even Attitude's puts were swimming in gains. Apple's dip sent his account from $19,000 to over $115,000, a huge gain of 520%. With more maturity than most WallStreetBets traders can ever hope to attain, our man closed his position immediately and rode off into the sunset, never to be seen on WallStreetBets again, which is probably the smartest thing he could do. Let's do the sponsored segment so I can get paid with a bonus for all of my viewers. Instead of taking ridiculous WallStreetBets-esque trades with janky DD, non-degenerates like ourselves can wager on things we actually know about. On the platform Kalshi, you can wager on the outcomes of economic reports, corporate announcements, and even politics. Do you want to place a bet on how capital gains taxes will change by 2026? You can do that. Do you want to take a straight bet on how many vehicles Tesla will deliver in Q2? You can do that as well, without having to worry about how the stock will react. The weather? You can trade that too. What a time to be alive. And Kalshi recently added lines for the 2024 presidential election. They are the first exchange where you can legally trade on elections in the United States. I'm placing a wager against my preferred candidate. That way, if my preference loses, at least I got paid. We call this a big brain move. Through the Kalshi app, new users who deposit $100 and place a wager will receive an additional $20 in free bets. Make sure you deposit through the app to receive the bonus. Link down below. Thank you, Kalshi, for sponsoring this video. Now let's get back to dank trades. Next up in the hot seat is a former NPC who calls himself Addict3690. Coincidentally also joining Reddit in May 2022, Addict began his Reddit experience by asking boring questions in the Ask Reddit sub, all of which got removed. But after some substantial time spent discussing computers and video games, our man quickly took his internet experience to the next level by joining up with WallStreetBets in early 2024. In short order, Addict was posting to WallStreetBets almost exclusively as he gawked at the huge gains and relished in the devastating losses. In May, it became clear that the big shot was a coffee enthusiast, and although he was not a fan of Starbucks coffee himself, he recognized the value of this white girl brand. In response to a now deleted post, Addict sharply criticized another trader for paper-handing Starbucks calls instead of doubling down. Shortly thereafter, it appears as though our homie convinced himself that Starbucks was the play, as his DD indicated the company would soon experience a much-needed shakeup. At the time of his post, Starbucks was trading for around $75, down more than 20% on the year. Zooming out further, the coffee stock was down to prices not seen since the COVID dump. And just the week prior, Starbucks stock got scorched in a 15% beatdown on news that the coffee chain was no longer cool to the Chinese. The stock was severely dragging the Becky index down. Addict's DD indicated that CEO Lakshman Narasimhan would be shit-canned for spending too much time meditating at work, and former CEO Howard Schultz would soon come back to right the ship, driving the stock back to $100 by the year's end. He was so confident in his assessment that he put his OnlyFans girlfriend on the line. With his $8,000 portfolio, our man went all in on deep out-of-the-money calls at the 97.50 strike, expiring in January 2025. Other WallStreetBets users mocked him for his inane ranting. They criticized his use of a 97.50 strike price when his price target was $100. Others believed Starbucks had become too political for its target market and would lose favor among pretty much everyone, including the critical 14 to 40-year-old white woman demographic. Even Visual Mod piled on the dunk. They would soon be proven wrong. On August 13th, the Starbucks board made a decision that its brand must be cool, or else nobody would buy coffee for $10. And CEO Lakshman was not cool. The board sent its CEO packing to be replaced by the CEO of a much cooler brand. Stepping in to replace Lakshman was Chipotle's CEO Brian Niccol. Even his name almost had the word cool in it. And with this move, investors agreed that the company was back on track. This man had turned around Chipotle in its struggling days, and now it was time for him to do the same for the coffee shop. Immediately, Starbucks erased nearly a year of losses as the stock made a decisive upward swing from $75 to $96 overnight. Investors were overjoyed with the shakeup, which is probably the most humiliating thing to happen in Lakshman's career. The moonshot put Addict's calls at the money, and his initial $8,000 position had transformed to almost $340,000, with $294,000 of which occurring just that day. The indemnified bull cashed out over $200,000, letting the rest ride. In an out-of-character move, several WallStreetBets users recommended he cash out of YOLOing permanently, but Addict was unshaken. He stated his intent to continue YOLOing until he had a lifetime supply of money. But will he follow through on this plan? We may yet see Addict again. Until next time, Addict, now let's move on to dank trade number 3. Sliding into third, we've got a young buck from the thriving state of Maryland named No Giraffe 3252. At the ripe age of 16, this teenager did what most teens do and got a job grinding at Foot Locker after school. When he got his driver's license, he committed to further pursuing the bag, pushing overtime through the summer. Putting in his hours at the shoe store, No Giraffe made a respectable amount of $200 to $300 per week during the school year, beefed up to as much as $450 per week in the summer. Which, to be fair, is probably already more than most WallStreetBets users rake in. Rather than burn his stacks on high school stuff like Essentials hoodies and Shake Shack, Mr. Giraffeless responsibly put almost all of his earnings into Robinhood. Since he was still a minor, he traded under his father's name, the legality of which is unclear, but his father was fully on board with this plan, provided the young man funded it himself. Over about a year of retail grinding, the young man saved up about $10,000 in his Robinhood account by October 2023. As he got deeper into junior year at age 17, Giraffeless resolved to become king among high school peasants before graduation. He was on the clock, and there was no time to waste. Having been a fan of Kamikaze Cash since 2021, the Giraffe had seen huge numbers of WallStreetBets traders blow their lives to smithereens on long options. To avoid this fate, our man assessed the market's condition and decided tech stocks were overvalued and he needed to react. But rather than go long options and get chewed alive by theta, he determined to go in hard on credit spreads. By selling credit spreads, his losses and gains were both capped, but he could enter and exit the positions methodically. In one of his first big trades ever, the young chap took a contrarian position on the high-flying Nvidia before earnings, expecting that the company would not be able to live up to the hype they built for themselves that quarter. He went all in on call credit spreads, putting almost his entire account on the line as collateral, selling his spreads for a total of $8,000 in premium. In Nvidia's brief dip that followed earnings, he cashed out for a $2,000 gain. A month's worth of overtime at Foot Locker was gained in moments. These spreads were to become his bread and butter. Over the next several months, Giraffe became a credit spread enthusiast. As the market recovered from each dip to a new high, the young man printed on his triple Q put credit spreads, with call credit spreads interspaced when the market got choppy. His success was remarkable. Over 6 months, he tripled his money to $30,000. As spring break approached, he knew what he had to do. With his friends, he celebrated his thick gains in Ocean City for a weekend of debauchery and underage drinking. For the rest of spring break, he surprised his family with a cruise, paid for almost entirely by his trading gains. While feasting, drinking, and admiring bikinis topside, his father asked in depth how he had paid for all this, and why would he choose to do so. Giraffe cracked open Robinhood and showed his dad the results. The gains could not be denied. They were consistent, with credit spreads paying out in a stair-step-like fashion. Giraffe and his father discussed his dad investing in his own Robinhood account for a change. They reached an agreement in which Papa Giraffe would cash out a $45,000 CD and invest it in Robinhood so that his child prodigy can expand his bankroll and trade with more liquidity. The plan was that Giraffe would use gains to pay back his father first before keeping any of the gains for himself. They cheersed over a few sodas and prepared to execute their plan. The question will come up, was Papa Giraffe rich? Why would he give up this much money? According to Giraffe the Younger, his father was not brought up rich, but invested consistently and conservatively over his lifetime, diversified in low-risk assets, including fixed-income CDs. His father never really took an aggressive shot at wealth. This move, cashing out a CD to let his son buy options, may have been his riskiest financial move in life. After the family made it back to port, the young man got back to business with his improved portfolio, buffed to 80 grand. In his first move, he played conservative, selling a cash-secured put on BITO with about 10K of collateral, but bailed on the position after seeing no gain for about a month. This would not do. He needed something more aggressive. That thing was Meta. On 4/20, Giraffe assessed the stock ahead of earnings on April 24th. He determined that Meta typically rose and never suffered a significant dip after each earnings report in recent memory, and saw this as an opportunity to print a fat stack. On the morning of April 24th, Giraffe put up $50K of collateral for a $6,200 credit on deep out-of-the-money put credit spreads, then tacked on a few more later through the day. Surely, this low-risk move would get the ball rolling, but as Zuck took the mic after hours, investors were not pleased with his plan to continue dumping money into metaverse plays like it was 2022 all over again. Zuck was supposed to be done with this nonsense. Meta tanked as a result, dropping more than 10% in its sharpest decline since the bear market. Giraffe was hosed. He had to pony up heavy bags to close his now in-the-money put credit spreads, costing him a loss of $37,000. In this one move, most of his dad's CD was gone. Without hesitation, in what was certainly a revenge trade, Giraffe looked at the earnings calendar to choose a new target. He recognized that Snap, due to report earnings, was an easy short. Fewer people in high school use Snapchat anymore because of competition from Instagram and OnlyFans. Further, Snap dumped after almost every earnings announcement. Going bearish was an obvious choice. On April 25th, the day after the Meta fiasco, Giraffe put up $25,000 of collateral to collect $1,600 premium on call credit spreads. But Giraffe's play got spanked once again, as Snap broke its streak of L's and shot up on an unexpected revenue beat, driven by better investing. When the market opened on April 26th, another $7K had evaporated. With a shell of his former highs, Giraffe was deeply spooked. He had promised his dad gains, but instead wiped out his entire CD value in just over a month. This was simply not the same trading he had experienced prior, but he needed to do something, lest he be discovered and dishonored. With what he could muster, Giraffe put together another put credit spread on BITO, a Bitcoin ETF, on April 30th, being bullish on Bitcoin in general right after the halving. But a simple credit spread would not be enough. To leverage himself and recover some of these losses, he reinvested as much of his premium as he could into more credit spreads, thereby burying himself balls deep in leveraged positions. But BITO is not simply a Bitcoin ETF that holds Satoshis in cold storage. It is instead a futures-based instrument that distributes its earnings as dividend. The following day, on May 1st, the stock tanked on its largest distribution ever of $1.68 per share in reaction to ex-dividend, something Giraffe wasn't even aware existed. Bitcoin also dipped that day, sending BITO down below his long puts, putting him at risk of total illiquidity. Before it could get even worse, the unfortunate young man closed out with a $16,000 loss. This was strike three. His account was barely above $7,000, wiping out more than his own trading gains in addition to his dad's loan. There was only enough for one shot left, and he needed to go with something reliable: GameStop. Everyone's favorite MOAS stock had experienced a MACD crossover, a technical indicator that says momentum is swinging toward the bulls. In response, Giraffe sold put credit spreads at the money, picking up some modest gains. But as the stock continued to rise, he rolled his strikes higher, building momentum and adding leverage. On May 8th, he got aggressive with in-the-money put credit spreads, and still, GameStop continued its moon mission, printing loot like there was no tomorrow. After 3 failures, this was the move he needed. A GameStop squeeze round 2 would indemnify him of his losses, bring back his riches, and make his father proud. He was back on track. And then, things got even better. On May 12th, Roaring Kitty tweeted for the first time since the fabled short squeeze. A picture of a man leaning into aggressive video game posture told the ape army that it was game on. The stock spiked, rising toward the 30s, and the whole day, Giraffe was rolling his strikes to new highs. Within 24 hours of the tweet, Giraffe was closing in on $30,000 with blue skies ahead. Roaring Kitty had come to save him, and then it got ugly. While GameStop spiked, the board members discussed ways to make money off this boost. They decided that they should dilute shareholders by selling more shares, making the bold announcement on May 17th. In short order, the stock went down 20%, then continued flopping down further throughout the day. Giraffe's put credit spreads were in the money. All of his gains in the previous weeks, and virtually all of his remaining balance, was gone. Crushed just like his hopes of making his father proud. Up to this point, he had not told his father of all this madness, and now, wiped of his liquidity, he avoided his dad for a week. But the no-talking thing made his dad suspicious, and eventually, Giraffe was forced to spill the beans. He admitted his failure to his dad, who promptly went out for cigarettes. He did return a few hours later, after letting his son sweat it out a bit. Indeed, Papa Giraffe was not a happy man. But being patient and conservative with his money his whole life, he looked at the silver lining and considered this an expensive lesson to his son. Better to lose $45K at age 17 than $450K at age 40. Although Giraffe had dishonored himself, he was to be spared and not forced to commit seppuku. As for Giraffe, he appeared to be in the acceptance stage of grief during our talk. In keeping with the terms of his loan, he is resolved to indemnifying his dad later. As he looks ahead to college, he will surely reach campus as a young man with experiences beyond his years. Keep up that optimism, young man. It goes away before you know it. Now, let's move on to Dank trade number 2. Taking the silver medal, we've got a Mexican food enthusiast who calls himself the Master 8899. A longtime Redditor, our man began his journey by growing things in buckets, a technique called space buckets, which hopefully works better than my attempt at growing mushroom buckets for homestead homies. I'll drop a link if you want to see that fiasco. The master also appears to have attempted growing dank kush, but his ultimate results are unspecified. After a few years of doing normal stuff like this, it appears the futurist gardener took an interest in WallStreetBets like so many other normies in January 2021. Apparently a novice of investing apps, he was confused by a glitch on Robinhood's interface showing him that he'd experienced a $1 million swing out of nowhere, something that we Robinhood veteran users are used to. We have to assume that he became disillusioned with his investing affair for the next several years, as he neither posted nor commented again until 2024. In the interim, he appears to have been active on some music board and a fitness board, where he asked for guidance on how to combat obesity. Whether this was successful or not, we don't know. But what we do know is that he returned to WallStreetBets with a vengeance. June 24th, 2024, Nvidia shares had recently taken a dip to about $118, and traders were starting to think that this stock might finally get hit with a pullback. But the master was not convinced, and he went in for 100 at-the-money calls worth $82K expiring in late July. And evidently a man of means, he also bought over 3,700 shares worth $480K at an average of just under $125. The following day, Nvidia spiked back up, and the master had flipped his position for an over $100,000 gain like it was nothing. Coming off this early success, the big man flipped several more positions, especially on SPY, printing G after G with uncanny ability. As his successes piled in, so did his notoriety increase, and so did his ego inflate. Believing himself invincible, the master took a hard look at his favorite brand of Tex-Mex for his next play. July 8th, 2024, Chipotle was trading for just under $60 on a split-adjusted basis after reaching almost $65 in mid-June. The big chungus pulled up to Chipotle to see if the company's food quality had decreased, but determined it was still the same burrito he had always loved. Believing this dip was transitory and expecting earnings to beat expectations due to high demand for burritos among the populace, the master went fist first into $600,000 of calls at the $61 strike, expiring August 2nd, shortly after earnings on July 24th. With these calls being only a few dollars out of the money, our man expected gains from the first uptick. Instead, the stock's initial dip started him off $45,000 in the red. No matter, his DD was extensive, and he was confident this play would turn around, potentially even before earnings. He was prepared to sell if he was indeed already deep in the green by earnings date. If it did not turn around, he was prepared to cut losses at 20% for a modest $120,000 loss. But this claim was clearly without merit, as Taco Man continued to hold on at 25% losses. Instead, he hit his local Chipotle to reflect on his position, deciding once again that these bulls were too good for less than $61 a share. He resolved to hold through earnings, praying for a queso-slathered EPS to send his stock to Guactown. After hours on Wednesday, July 24th, then CEO Nickel started streaming and the chat filled up. The stock had been on the struggle bus for a month, but traders were on the edge of their seats as the results came in. The Big Burrito announced that America's favorite Mexican chain had crushed earnings on both the top and bottom line, driven largely by increased prices and increased foot traffic at restaurants. The chain just kept on selling Tex-Mex bowls like it was Cinco de Mayo. Shares shot up 13% in an instant. But then, the CEO just had to say all this boring shit like state of the economy, inflation risk, and a bunch of other poor people comments and concerns. Investors spat out their barbacoa. This guidance was serious business. They started dumping their shares after the big aftermarket jump, and the stock ended up basically flat by 8 p.m. On Thursday morning, the post-earnings IV crush karate chopped the master's calls with maximum force, sending his position down 85%. Weird Redditors even got into his DMs to dunk on him for his embarrassing loss. But the master maintained poise, following through on his promise to post losses with pride. His post revealed that he had sold about 500 calls prior, preserving some small amount of capital, allegedly only a couple thousand at best. But he diamond-handed over 1,700 contracts to the bitter end, suffering at least $465,000 in losses on this lot for a nearly $600,000 total loss. In his reflections, he assures us that this is only about half of his account, so he could theoretically lose this much again if he wants to. Chipotle's nutrition calculator indicates that their largest non-custom burrito of almost 2,400 calories costs about $21. With this loss, the master could have had about 28,500 of these monster burritos, sustaining him for about 78 years. The big man legitimately cooked himself out of almost 8 decades worth of double-stuffed carnitas chipotle, and that L is one we shall never forget. Consider switching to Taco Bell, homie, ticker YUM. And now, the moment we waited for, the dankest trade of Hot Boy Summer. Taking home the gold as Hot Boy Summer's dankest trader is a real brainiac by the name of Corey407Wok. Corey joined Reddit 10 years ago and has posted and commented so many times in the past decade that even reading his history is burdensome. But perusing our man's extensive history shows a fascinating story in financial literacy. Back in 2014, Corey had about $6,000 of play money laying around and took steps to become more frugal and save more, like switching to discount phone carriers and jailbreaking early smartphones. At age 28, he graduated from Belmont University as a pharmacist with $175,000 in student loans and anticipated a job earning $125,000 a year, which is about $165,000 in today's money. Although he ended up with a slightly smaller salary, he focused on frugal living and modest investing while he paid off his student loans, a level of responsibility uncommon among users of WallStreetBets. And that's because at the time, WallStreetBets was a small backwater sub that barely anyone had ever heard of. By the time he jumped aboard our favorite sub in August 2022, he had a lot of time to make up for. His first post on the sub concerned a certain towel stock called Bed Bath & Beyond, in which Corey described a $7,600 position and asked for price targets in the $20 to $30 range. But this ticker was quickly banned from WallStreetBets, and for good reason. As we all remember, the towel company's saga was a complete shit show, as Bed Bath & Beyond ultimately filed for bankruptcy and got the coveted Q at the end of its ticker. This pushed the discussion into the dark corners of retail investing pump and dumps, places like the BBBY Butterfly subreddit. But ultimately, being a college graduate, Corey realized the towel play was cooked and his money was gone. He spent the summer of 2023 posting pictures of 90s nostalgia on Nickelodeon subreddits, but thinking about KB toys and vintage Batman cups can only go so far. A man has needs. A man needs gains. After this hiatus down memory lane, Corey Wok got back in the game with reinvigorated conviction. He performed an assessment of his portfolio and concluded several things. 1. His boomer indexed ETFs were good. 2. Having an appreciable holding of Bitcoin is a smart hedge against inflation, and he borrowed about $40,000 to buy 2 coins. And 3. His modest position in AST Space Mobile was too small. Convinced by persuasive DD and a then 2-year-old Twitter post, Corey was convinced that this stock, while struggling to get its feet under it, was deeply undervalued. The company had recently released a new line of merch in celebration of hitting key benchmarks, including using their satellite to make a call from Midland, Texas to Japan. In spite of this milestone, the stock itself was sucking butt, reaching approximately the same price as a Taco Bell burrito by early autumn 2023. To Dr. Corey, this was completely unhinged. The big man started to buy up shares with a passion, dumping pharmacist paychecks into shares as the price continued to depreciate through the end of the year. He faced significant self-doubt as the stock got donkey punched down to the low $2 range in the spring of 2024. He appears to have been quite frustrated with the stock's lagging performance as the market rose around him. But in spite of everything, the faithful investor continued to stack shares with increasing fervor, bringing his basis to the stock's lows of about $220. This remarkably low basis indicates he made a massive purchase near the bottom, demonstrating unwavering faith in the satellite phone company. Around this time, he also appears to have reevaluated his risk tolerance for Bitcoin and sold his 3 coins for about $60K each. In doing so, he repaid the loan he used to buy them, bought $60,000 of VT Sats, and over the next year rolled a further $100K into ASTS. By late April, he revealed that he had about $150K invested, all in the red on his ASTS shares. He needed to double in the next few years so he could retire before 2030. It appears in early May that he was close to throwing in the towel on the satellite stock, but held steadfast, clinging to his DD and buying 25,000 more shares between $2 and $2.50. On May 15th, ASTS had its first green day in like 3 months. Closing around $2.60, Corey's $25,000 share purchase at $2.11 was firmly in the green after years of red candles and pain. He celebrated with Panda Express to cheers the company's plan to actually launch a satellite called BB-1, but the company finally hitting this milestone was only the beginning. Adding 5,000 more shares the next day at $3.23, Corey put his spacesuit on for the next leg up. By late May, the stock had exploded to $8 in anticipation of its next satellite launch, a price that still kind of looks like shit compared to its $10 IPO. But when you've averaged down for 2 years, the gains are like snorting green candles. The doc was in euphoria. As LinkedIn posts came through describing military use cases for AST equipment, the stock continued selling higher. The amount of posting he did over the next month is appalling. It is hard to imagine him doing anything but admiring the stock, but his obsession was well deserved. By early August, the stock was flying past $18, and our man was sitting on a $600,000 gain. But this was not enough. The company was just getting started. On August 6th, ASTS got Federal Communications Commission approval to launch its next constellation of satellites later in the month. Already, the satellites were being assembled in Cape Canaveral. The intensity of euphoria around this stock cannot be overstated. The stock made a straight vertical green line for the next 2 weeks, cresting $32 by mid-August. For all his patience over the past several years, his diamond hands were rewarded with gains of $1 million. As of August 15th, the launch is expected to go off without a hitch. It seems like the only thing that can stop this stock is a literal explosion at the launch pad. And I'm not going to come back and update this video unless it does. For as long as YouTube servers stay active, Corey is printing money left, right, and center. For once, a YOLOer reaches coast fire on a literal rocket ship. Corey, your diamond hands are legendary. Your immense gain was not through luck, but through good old-fashioned DD on an ambitious company. Let no one say that fundamental analysis is dead, and you are the one who proved it. It is my honor to offer you the crown of kings. May your shares forever rocket higher.
Who wants to be king?
Thanks for watching, everyone. Join our free Discord to get a piece of the Theta Gang community. See you next time.